crypto is interesting. Everything from Bitcoins, blockchain, Solana, Ethereum. I'm no expert in these, but I've always wondered what the nuances of this industry are, and today is probably a good day to find out. I am a critic. I have never bought any of these ever. I don't know if I'll remain a critic after this, but I suspect I will. So let's see how the conversation with Brian goes. I know he's going to take the for side. Somebody has to take the against side. It probably has to be me, even though I don't know too much about it. So this should be fun. How are you?
Great. Good to meet you.
Good to meet you.
Yeah.
Come.
All right. Yeah, not too far away. Got a big crew here.
Do you like coffee?
Maybe decaf or something if you have that, or just water. Yeah.
Do we have decaf coffee?
If not, I'll just do water. Yeah.
You drink matcha?
Mint. Mint tea sounds great. Yeah.
Is that like your diet?
Well, I drink caffeine, but I tried it not to after noon, so it's easier to sleep. You know. Yeah. Yeah.
A lot of the people I met who were into crypto, like really into crypto, for the first time in a long time, they've become very disenfranchised in a way.
I've heard that argument before, and I don't really see it. I'm going to call that out. Are you jet lagged?
No, I was actually Ojai,
Okay.
and I just drove back last night.
Okay.
Yeah.
You're doing like a retreat there or something? That's an interesting city.
Yeah, there's this pledge. So this was the 3-day offsite.
Yeah, thinking about how to do philanthropy effectively.
Mm-hmm.
That's great.
Yeah.
Yeah, something I need to learn more about.
Yeah? Do you believe in it?
Well, yeah, I mean, ultimately, all the money we're making can only go to taxes, philanthropy, or your kids, I guess.
Mm-hmm.
So unless we figure out how to live forever, maybe that'll happen. So yeah, I mean, I think I've seen a lot of friends engage in philanthropy, and it's just like startups. A lot of it doesn't work, but the best ones do incredible things.
Yeah.
Yeah, and I've seen some people try doing philanthropy, and I think it had unintended consequences actually. So it's humbling, you know. It's probably quite difficult to do it well. Yeah, have you done any philanthropy?
Yeah.
What are your main focuses?
That was quite interesting. The door opened on its own.
I just roll with it, you know.
Yeah, we've done a bit of climate. The last year, I've been doing a bunch around entrepreneurship. So a lot of people in India need seed capital to get started. This podcast is also like that in a way. It's not for profit. There are no ads. There are no sponsors. We don't monetize anything. The intent is very much to tell young people where the opportunity lies. That's what today is about. In everything that you're involved in. For a day, we're going to make Brian not a startup founder, but a college professor who can teach people where the opportunity lies in your industry to build. Yeah.
It's great. I'm very passionate about how we can get more people to build companies in the world. I think entrepreneurship's a huge lever on how to improve the world. And yeah, I mean, India has so much raw talent in that department as well. So yeah.
But if, like you asked earlier about giving, if people live forever or for longer and they don't give, and if wage price inflation does not keep up with asset price inflation, like it does not, even in America for the last 30, 40 years. What happens to income inequality? I've spoken a lot about this over the last week because I've been there listening to lectures around this. What do you think?
I mean, it's such a big question, right?
Yeah.
I mean, I think one way to solve it is to make everybody a capitalist, right? So you're not just working for labor. How do you make it so everybody, even if you have relatively low income, you can put a little bit of money aside to own stocks or parts of other companies that can grow, right? So there's something like 4 billion people in the world today who are unbrokered. They don't have any ability to buy equities. And if you can democratize that, then everybody can have a piece of it, right? Like here in the US, there's an experiment that's being done right now. These Trump accounts, you probably saw that. So
Brad Gerstner's, I think.
Yeah. Brad Gerstner's been great on that, along with others. And just getting every kid $1,000 of the S&P 500 at birth can make them have skin in the game, right? So I think that's...
You know who I heard pitch this many years ago? Mike Milken.
Oh, yeah?
He had this blueprint mapped out, and I think Australia does it in some way.
Yeah.
Yeah.
Yeah, I mean, you could actually do it with a sovereign wealth fund as well. Some countries do that very effectively. And when you're born, you get a share of it, right? And then it's just like in any company like the one you ran or the one I run, our employees get equity. And it's a beautiful alignment tool of, we might not agree on everything, but we all own a piece of the same thing. So we're trying to work toward that. And then I think there's another interesting question, which is income equality the goal, right? I think we can all say income inequality makes people unhappy, but we don't want perfect income equality. That would destroy, merit and progress and competition and all these things, which are also good. So one way I like to think of it is, it's like, how do we just accelerate growth overall? Like, I think a lot of people are looking at two different things. Like they're saying, how much better or worse is my life personally versus a year or two ago? And then they're also saying, how much does my life better versus someone else? The second one is envy, right? The first one is really competition versus yourself. And is your own life improving? And I think we are also seeing an issue in society where people's own life is not getting better. I think if the rising tide lifted all boats, let's say everybody, even the bottom 10%, like their life was getting better, but there were some people getting way richer, they would still be mostly okay with that. It's if when their purchasing power or their wages are flat, and then someone's getting much, much wealthier, that's what creates like the biggest social unrest, I think.
It's an interesting thing to think about. If productivity were to go up and everybody's life gets better, but the rich get 10 times richer than they are today. I don't know if I can extrapolate that far, but I would still presume people would be unhappy because the very notion of wealth is relative. We all have a lot more today than we had 100 years ago or 300 years ago.
Yeah.
But people are not happier because of the relative change in individual wealth.
Yeah. Yeah. Are you familiar with the concept of the hedonistic treadmill?
Yeah.
Yeah. So I think both are true. Yeah. If, there's some things which today, like even just having like a great shower with like hot water or something, I take it for granted. But if I go camping for a week and I'm sleeping on the hard ground and I have to shower in cold water, I come back and I'm like, a hot shower is like the most amazing luxury, in the whole world. So you forget that if you sort of become acclimatized to these things, even if your own life is getting better. But then you're right, it's the other factor is the looking at other people and comparing. And that's part of human nature as well. So it's kind of an interesting question. Is it 50-50, competing with myself versus others, or is it 80-20? Everyone's wired a little differently. And what should it be in society? Like, should we try to encourage people, try to improve yourself, don't compare yourself to others? Should we try to teach that as a value? But maybe naturally people are skewed a certain way. So
what is it for you?
I mean, I always try to just compete with myself. It's human nature. I can't help but compare sometimes to other people, but I sort of try to catch myself doing that and try to reframe it in my own mind, right? Because I just want to be the best version of myself. I'm not, if if there was a friend of mine who, they made an investment and they got in Series A, and I put money in the Series C, and they did 100x and I only did 10x. I try to cultivate a mindset of, being happy for them. Now, someone could say, well, that's great for you, Brian. Your cup runneth over. You're living a life of post-scarcity, and there's a Maslow's hierarchy of needs and all this. There's a lot of truth in that, right? Like, if I was hungry or I was unsure where my next meal was going to come from, I might beat someone up to take their food, right? Or you become much more zero sum in your thinking. But beyond a certain base level of needs, I think it's healthy to try to cultivate I'm trying to be the best version of myself, not versus other people.
Yeah. Income inequality or inequality is an interesting question. I feel like it's not a problem in isolation. There will always, I'm a proponent of capitalism, like I know you are, and I've heard you speak about Ayn Rand in a couple of places. I hear you when you say separate church from state and then separate state from economics as well. But I think the magnitude of income inequality is somehow becoming a problem. It's probably smart for the beneficiaries of capitalism to also fiend altruism, because that allows for them to remain capitalist for longer.
You're saying feign altruism?
Feign altruism.
Yeah, okay. Basically fake it.
Yeah.
You're saying, okay, got it.
Right? Like when I remember the books of childhood, I can't remember where I read the story, but in a kingdom, if the net produce is 100 and the king has 10 and the rest of the city has 90, it's okay. But when the king has a vast majority of the resources, at some point the people come to his door with, axes and try to take it away.
Yep. Guillotines in some cases. Yeah.
Is the world getting there?
I mean, I think you can look at, there is a measure for income inequality, right? The Gini coefficient. And I haven't looked at it recently, but the last time I looked, I think we're not at all-time highs or anything like that. There have been periods of high, and you look at, it's different by country as well. So it goes up and down. I think it's probably, my guess is it's up a bit in the last 20 years, but we're not at all-time highs for the US, for instance. But yeah, definitely it creates feelings of unfairness when that goes up. And I think we're seeing that now with certain politicians getting elected, Mandami, these kinds of folks. Yeah. And of course, AI is a big factor there too. Everyone's trying to think is it going to take my job? And, so those fears are totally natural. And then the question is, what do we do about it, right? Some people would say we should slow down. We should press a button to pause all AI development. And to that, I would say, well, how are you going to get the countries of the world to collaborate on that, right? If the US does it, is China going to do it? There's people I've talked to who they're like, no, the US government should be meeting with the other, India and China and all the superpowers and saying, we should collectively agree to do it. And I'm like, well, then how are you going to guarantee that they do it? There's going to be inspectors walking through the data centers, but it's if you're training a new AI model on a data center, you can turn it off when the inspector is there, and 10 minutes later, the thing is training a different piece of software, right? So it's hard for me to imagine a realistic scenario where the world collaborates to pause AI. So, okay, I think that's off the table. Maybe you agree, maybe don't. So we're in a world where we have to, the only way through it is forward. We have to try to build it responsibly. We have to, try to leverage it for good and instead of bad. It's just like any technology, right? Fire, or you could make up any example you want. Crypto is another good example, right? Bad people have tried to use crypto. I think it has a lot of benefits to update the financial system. We can talk about that. So I think the only way out of it is through it. And you have to just, whoever in that moment is ready to step up and try to build something good in the world, they can sort of tell people about it and see if the world buys it or not. And people vote with their dollars too. Nobody wants to buy an AI model that is dangerous, that's inside their company, or that's against their values, right? If it's if they think a company is evil or something, they're not going to buy those products. So the free market is actually somewhat of a governor here on some of this. And then I think other people would say, well, the government should come in and do something, right? And then you have to kind of, it raises the question of how competent do you think the government is on the frontier of technology? At least in the US, sometimes I'm skeptical on that. The Indian government has actually done some things very impressive, working with, like UPI, and these things are incredible. So in some ways, we see competent government in some parts of the world.
Yeah. I have a different, I think the lens with which you are looking at AI and the one I use is slightly different, because here you're wondering if the fruits of AI are getting concentrated in a handful of people and a bunch of companies. In India, it looks like, are the fruits of AI getting concentrated in another country altogether?
Yeah.
Which is a harder place to be, because it's not about income inequality anymore. It's if we are any part of that value chain. What happens if we are not? Yeah. I think countries like India then go the other way, and they're like, can we be part of the AI infrastructure value chain? Can we be part of the energy value chain? Can we be doing something uniquely over there to capture some of this value? So it becomes really hard. And especially in a time when America has become as combative as it has, with tariffs and trade overall, it gets even more complicated.
For sure. Yeah, I mean, India has so many great engineering schools. I imagine that there's major efforts underway to build out the top AI companies in various ways there. And, one other thing that we're thinking a lot about is what's going to be the financial layer for AI, right? Because AI agents increasingly need to go get work done on your behalf, and they're going to have to make payments. And so there's a whole emerging area of agentic commerce that we're building out, and that's been exciting too.
Why does an asset that you deal with, say anything on the blockchain, win as a commodity of transaction for agentic AIs versus another?
Well, I think AIs are going to use a variety of things, but the reason why I think stablecoins in particular and blockchain are well suited is that, like an AI agent is going to have a hard time signing up for a credit card at a bank, and you have to show your ID, which only human beings currently can get this government-issued piece of paper. But an AI agent can spin up a self-custodial crypto wallet with stablecoins. And by the way, there should be a rupee stablecoin and everything. It can be fiat and country specific. But the onboarding works without KYC, right? And know your customer rules, which are present for most regulated financial service businesses. And then they can, the other thing is that the stablecoin rails have gotten very fast, cheap, and global, right? So for these small transaction amounts, like you can send a payment anywhere in the world in under 1 second in 1 cent US. So we're seeing a lot of agentic commerce send small transactions, even a couple cents US, to read this research paper or get through this paywall, and or just call another API query, that kind of thing. That doesn't really work with credit card rails, the small transaction amounts.
The need for KYC in a way is both a good thing and a bad thing, right?
Sure. Yep. That's its whole own deep topic. I mean,
especially when an agent does not need KYC.
Right. Well, that's what that's the question mark, right? Is those KYC rules are in place for good reason. They're trying to stop illicit activity. A lot of firms have looked at this and researched, what has been the cost and the benefit of it, right? And there is a pretty high cost for all financial services with that type of regulation. There's some estimates that only, I think, about 1% of all illicit activity is frozen or seized as a result of AML activities globally. AML is anti-money laundering, as you know. So look, I mean, we're a regulated financial service business as well. We do this in the US and every country where we operate. And so we're happy to follow those rules as a regulated financial service business. But I think, it creates such a high friction in the economy that it's like, imagine, like sending a WhatsApp message. It's free, instant, anywhere in the world. The number of WhatsApp messages per day, I think, is in like the hundreds of billions or something. And, when text messages cost 30 cents, there was only a 1/100th of that amount. So it's kind of a question of, for agents on the internet, like how much friction do we want to introduce into the system? And there's trade-offs around that for sure. So this is every democracy around the world, I think, trying to figure out what the regulatory framework should be. And that's something we've been working on in the US as well, getting hopefully this bill through Congress in the next couple months, hopefully.
When I send a WhatsApp message to you, I am subsidized the cost of sending the message to you by WhatsApp for Business or the data being repurposed for different things by Meta. What is the equivalent when I send you a stablecoin?
Well, you are paying a small transaction fee, so it might be about 1/10 of a cent US. So that might directly cover the cost of the people running the sequencers and the nodes and those kind of things. The stablecoin issuers, they actually are holding like in this case, the dollars, but it could be rupees or anything. They're holding them in US government or government bonds, I should say, right? So that's the business model of these stablecoin issuers. So there's the stablecoin issuer who's holding it in government bonds. They pass along some of that economics to the customer, but not all of it, and they hold some for themselves. And then the blockchain itself is taking like a small transaction fee, typically. Yeah, like on the base chain, at least, it's about 1/10 of a cent US.
So Brian, I'm not an expert in this world. I know very little. So whenever I ask you a question, if I sound too much like an idiot, excuse me.
No, I doubt that will happen. But yes, I'm happy to start wherever you want to start.
Yeah. So when I look at, let's assume USDT or USDC is backed by short-term American treasury, which yields about 3-4%. Now, if I take USDC from Circle and Coinbase, and Circle and Coinbase is earning 4% on it, when I in turn say pledge or utilize the USDC that I have, and I monetize it further, say I make another 3 or 4%, treasury can only yield once. Where is the additional money coming from?
Right. Well, so in that case, Circle is the issuer. They're holding it in the short-term government treasuries. Actually, when people are holding those USDC on Coinbase, majority of that is actually passed to them, the economics. So maybe 90% of that.
Isn't that what the Clarity Act is for? Like I read parts of it, but it seemed like you're not allowed to pass it on, and after this act you can?
Yeah, so this has been carefully negotiated in the draft Clarity Act. The banks kind of made this concern out there in the world that they didn't want any rewards to be paid on idle balances. So that made it into the latest draft of the Clarity Act. But as long as the customer is doing some sort of activity like a payment or trading, then they would be eligible to get these rewards. So the customer can still, at least in the current draft, if it becomes law, and it's currently allowed under the Genius Act, which already became law, customers would get, they could get the majority of these benefits from the underlying dollars held in short-term US treasuries. So that's the current arrangement. And then you had asked about another 3 to 4%. I wasn't sure what that part was.
Like if I were to lend my USDC, I can monetize it again?
Yeah, that's correct. So customers can opt in and choose to lend USDC into, say, a DeFi protocol if they want. And it can earn some additional yield on that.
Right. Now, if I were to buy USDC directly, no, forget that. Actually, if I were to buy American Treasury directly, I have a certain amount of risk. Let's say there is crazy inflation, yields go up, I have a mark-to-market loss on the change in interest rates. Even if it's short-term paper, I'm not talking T-bills, I'm saying 6-month paper, 1-year paper, whenever there is a significant change in interest rate, as it has happened historically, I would lose some money. Why would I, for the same return as I would get if I bought USDC or DT directly, put an intermediary in between and add an additional layer of risk to own the same instrument that gives me the same yield?
The reason is you can use the stablecoin as a payment. payment instrument, or you can use it for trading, and you can use it in DeFi. So in the traditional financial system, they have this separation, and they'll say, okay, well, here you can have your checking account, right? And that's for payments, but you don't earn anything on that. And then over here is your savings account or your money market fund, and that will pay you some yield for that, but you can't spend it. You can't use your money market fund to pay for coffee or something. So in this new financial system, we're trying to update the financial system. We're saying, why do we force the customer to move their money between these two buckets? Why can't you just have one pool of money where if I want to spend it, I can spend it, and if I want to earn some yield, I can earn a fair rate? So that's kind of the goal with stablecoins.
In a way, the reason banks do that is they can use your money to lend and monetize the money they have, right?
Exactly. Yeah.
Fractional.
They basically want to have the deposits in your checking account where they don't have to pay you anything. So in my view, historically they've intentionally created this friction so that they get a larger net interest margin spread, is what it would be called in the banking world. But
so where's the spread for you guys, for Circle and Coinbase? If you're going to give out all the treasury yield while you take the underlying risk of a crazy spike in interest rate, where is the spread to make good for this equation?
Yeah, so we keep, it's about 10% of the economics of it depends how much, money people have, and people could negotiate different rates at different providers. Maybe the market will compress even more over time. I don't know. But currently today, it's about 90% of the economics, at least on Coinbase, are given to the user. So we are keeping, the 10%.
Is that enough? If you were to say America has as much debt does it have as it does, and a lot of countries across the world are paring down their exposure to American treasury because 4% is not commensurate to that level of debt. And in a certain way, the American government has indicated that they would like to see their currency depreciate to be more competitive from an export and manufacturing lens. Is 10% of the economics on 4%, I'm guessing that's like 40 bips or 50 bips. Is that enough to cover the risk of an interest rate spike?
Yeah, well, a couple of points. One is we're not getting exposure on the interest rate spike. We don't have liability there. I mean, so I think before you were kind of saying the interest rate you're earning on short-term U.S. Treasuries may not cover inflation risk and things like that.
The change in interest rate.
Yeah, but that's not something that would affect us, like in terms of our bottom line. So we're just whatever the interest, the short-term bond rate is, we would pay 90% of that to the customer.
And would you also pass on the mark-to-market of interest rate changes to the customer?
The mark-to-market interest rate changes. What do you mean?
Like say the treasury moves from 4% to 5% or 4.5% to 5.5%.
Yeah, we would adjust it. Yeah.
Right.
Yeah, but I think the broader answer to your question is, is that enough, right?
And how do you cover calendar risk? Say you have different maturities of treasury. How do you cover the calendar spread of different treasuries losing different amount of money? You would just pass on all of that to the customer whenever it changes.
Yeah, I think there's we're not a stablecoin issuer, but I think the ones like Circle, and then they hold different maturities. Like some of it is probably some percentage of it is 24 hours, overnight. Some of it is 1 month. I think the max they can do under the Genius Act is 90 days or 93 days. So in the worst case scenario, if everybody wanted to withdraw it all at once, there's a lot of liquidity for short-term U.S. Treasuries. But in the worst, even if that went away, the worst thing you would do is just everybody would get their money over 90 days. So that's what the U.S. Congress kind of landed on as a reasonable, low-risk backing. And by the way, if you compare it, banks do fractional reserve, so they've lent out most of the money, and that's partly why they're so heavily regulated. They're doing fractional reserve. So in a stablecoin issuer is 100% reserve. The only risk they're taking is at most a 93-day U.S. Treasury, which most people would consider that to be, the risk-free rate, so to speak.
Right.
Yeah, but I think your broader question was sort of like, is that enough? And my comment on that is that I think that the cost structure to run a great fintech company is just come down over many decades, right? the classic, bank model where you have these giant buildings and, and skyscrapers, and you have branches on every corner, and you have armies of tens of thousands of people doing compliance. Coinbase, I think we're just a much more efficient company, and we can pass on those benefits to the customer, right? So we don't have branches. We don't have skyscrapers in major cities around the world. We have some offices, and we're able to use things like AI and automation to make a lot of these compliance processes just much more efficient and more accurate, higher quality. So we're trying to just build the next generation of financial service business that can provide better financial services to people. Crypto is an important, piece of that, but it comes from all kinds of things, policy work and good customer service and everything. I mean, you know how hard it is to build a great financial services company, right? So that's what we see is we think that crypto is a piece of that puzzle, and we can help update the financial system, just make it faster, cheaper, more global, permissionless access for everyone. Yeah.
I tried for a little while, a couple of years ago, to figure out if there is a business to be built around repatriation of money back into India. Remittances are quite high.
Yeah.
I think the amount of money that goes back to India is about 150 billion a year.
Yeah. I think I read it's the highest remittance market in the world, right?
Yeah.
Yeah.
Yeah. The problem is there were no off-ramps back then in India for a stablecoin per se, and the government, very rightly so, is disincentivized to provide an off-ramp for a stablecoin that is backed by the American dollar in a way,
Sure,
by virtue of what happened when the US sanctioned Russia and the SWIFT. I mean, you don't want to... I don't see where the incentive lies for the Indian government that runs a really tight fiscal policy by virtue of, the oil shock and everything else that has happened in the recent past, to allow for an ecosystem like that to foster. Because once you provide an off-ramp, you don't know if people start transacting in it. You can't really monitor USDC in that way.
Mm-hmm.
Yeah. So I don't know if that business opportunity is there. Have you guys considered Coinbase? I know you guys came into India at some point a few years ago, and you're probably coming back.
Yeah. Well, yeah. So on the stablecoin point, I think every country has the right to have sovereignty over their own money, and I know India is that's very top of mind for them. So every country in the world, like these major countries of the world, they're all creating digital versions of their own fiat currency, right? So that a lot of stablecoins today are dollar denominated, but there's euro stablecoins and yen.
But none of them are working.
Well, I think you're right. Like the US has actually been forward leaning on that. And I would be certainly an advocate of India having a digital rupee that in a stablecoin format that has clear legislation backing it. That's what really caused it to take off in the US. Because without that, you're right, like people are going to be tempted to have dollar-backed stablecoins. And I think India should be forward-looking on that, just as they've been with UPI and all those things that it's kind of the envy of the world in terms of digitization in every other category. So they might as well have a digital rupee. And you're correct. Coinbase, actually, we did try to launch back a few years ago, and we had trouble accessing the UPI system. But we've got that fixed now, so we're actually planning to relaunch in India on Monday, and I believe we're now the first international player in India that has a local license and access to the local payment rails, and we registered with the FIU, and so we've got a local entity, local license, and I'm excited to have Coinbase live again in India.
Can I ask you like a far extrapolated question?
Yeah,
we have a need to get more dollars into the country in exchange for rupees. What kind of product or ecosystem under what you're building can help us foster that? Like I had this stupid idea at some point, and I spoke about it somewhere, that Indian households have a lot of gold.
Yeah.
Like insane amounts. This is all we've been buying from, like if I can remember my grandparents and great-grandparents, it might have been a gram of gold, but people have been buying gold in all of our history.
Yeah.
I was thinking of a coin where there is a clearing house in, say, every town and every district. People have, say, 10, 20, 30 different pieces of jewelry that they can't use at one point. They can only wear one thing at a point. So you take what you own, go to this clearing, depository, custody place, place your jewelry when you're not using it, and in return for that, you get a coin backed by gold that you can monetize by lending, investing, pledging, and doing other things with it. Do you think something like that could work?
Yeah, I mean, I think in the same way that rupees and dollars can be tokenized, you can also tokenize gold. You can tokenize stocks. You can tokenize treasuries, bonds. So anything can get tokenized. And what generally happens is that you see a more liquid market for that underlying asset and better distribution globally and real-time settlement. Like it's pretty difficult to take a bar of gold and transport it across the world, or to pay for a cup of coffee with it because chip off a little flake or measure it or something. But you
don't have to transfer it. Say if I'm in India and I created a gold coin and Brian in LA wants to trade with me, I'll call up a vault here and settle an equivalent value of gold as the gold there without actually transferring the commodity.
Yeah, that's what I mean. Yeah,
like when gold was backed by, the dollar was backed by gold, actual physical gold did not move around. People just settled it.
Right. So I think that would absolutely happen, yeah, in that case. There actually are some people, I think, who've done that. They have tokenized gold reserves on chain. And I would say, by the way, Bitcoin is like a digital version of gold. It's actually it's very much inspired by gold and the gold standard. And countries all over the world have that sort of affinity and cultural history with gold. And so the scarcity of it and the decentralized nature of gold, like there's no one country who controls it, right? The supply is finite. So that's what gives people a lot of trust around it. And then, it's quite durable. It doesn't go bad. Like maybe people might trade bags of rice or something, but it could go bad. Like the gold doesn't go bad, right? So these are some of the properties of money, right? And Bitcoin is, I think, it takes all the best properties of gold, and it is even better on a couple of dimensions, like the portability, right? You can transfer Bitcoin instantly, and the divisibility of it, you can very easily divide it down to 8 decimal places. So in many ways, I think the creators of Bitcoin, Satoshi Nakamoto, whoever that is, they were inspired by the gold standard and tried to make a new gold standard, actually.
Can I lean on Professor Brian from Founder Brian for a while and go to first principles? What was Bitcoin? I read the white paper. It kind of was a protest around the banking crisis of 2008, right? When it came out.
Well, that was mentioned, in the first Bitcoin block. This chancellor on the brink of bailout was the quote that was kind of enshrined in the first Bitcoin block. So that certainly spoke to the motivation of the people or person who created Bitcoin.
It's a very simplistic way to define Bitcoin when it began, at least the paper. It was trying to solve one core problem. How do two people send money over the internet without needing a bank, government, or company in the middle?
That's right, yeah. Peer-to-peer cash was what was described in the abstract. And they were trying to eliminate intermediaries.
And why? Because the Fed was printing excessively and there was unlimited supply of dollars in the system, and they were inflating or deflating the currency without you having a say over it?
Yeah, well, so again, speculating, having not spoken to Satoshi Nakamoto, but just having read the paper and seeing some of the early internet forum discussions, I think, it was all of these things. So it was a try to be a hedge against inflation, and saying that people deserve sound money that holds its value and can't be eroded by inflation. I think they were trying to reduce the cost of transactions. These intermediaries sometimes take high fees or introduce delays. And then I think there was really like a freedom argument underpinning it, which was that economic freedom is important for anybody to be able to live their life and start a business. And sometimes we talk about other freedom, freedom of speech or to congregate. And if you can take away someone's economic rights, you can take away all their rights, really, because if you don't have enough money to have transportation or food or housing, you can't really express your other rights. And so economic freedom is this important thing that they were trying to guarantee with Bitcoin, and said anybody in the world, as long as they have an internet connection and a smartphone, can have access to sound money, and they can hold their wealth in a way that it can't be taken from them, and hopefully begin to participate in the global economy in a more open way. So those were the principles that Bitcoin was founded on, at least in my view, and I think they're just as important today.
Can I ask you another first principles question?
Yeah.
Can you explain blockchain? What is a blockchain?
Yeah. So a blockchain is it's a distributed ledger. So typically at an intermediary, like a bank or something in the prior system, you'd have one company or person keeping an account of, I'm going to debit one rupee from Brian's account and give it to Nikhil. So I -1 and +1, somebody has to record that as a single transaction to make sure that nobody double spent the money, right? Now, what a blockchain is it's a computer science breakthrough which allows a distributed set of computers to keep a ledger and come to consensus about who has how much at any given time. And that was a computer science breakthrough that really hadn't been solved before. And so it allows these peer-to-peer transactions to happen now without any intermediaries. And this distributed set of computers, kind of like the internet, right, could now come to consensus about who owns what. And so sometimes people call Bitcoin and blockchain, they call it the internet of value, right? Because the internet was a breakthrough in terms of democratizing publishing of information, and blockchains were democratized movement of value.
Another way to, when I'm trying to think of it, because I don't understand it truly, is I use Google a lot, like Google Drive. It's a Google Drive sheet, a Google Drive Excel sheet of a sort, where everybody has access to that Drive page, and when a transaction happens, we can all see it at the same time?
Yeah, so I'll get into a little bit of the computer science under it, actually. Imagine many of your listeners are very technical. So, and I actually would encourage anybody to go read the Bitcoin white paper. It's a little bit hard to understand the first time, but I think it's worth trying to read. And it's one of the most important documents, written in financial history, right? So, okay, so the way it works is if you have a set of these computers on the network, anybody can generate a transaction and broadcast it, and they each kind of relay it to each other. So they're kind of gossiping all the computers and saying, all right, what transactions have you seen? And they're relaying, so everybody has seen everything. But that doesn't mean those transactions are confirmed yet. So to confirm a transaction, because somebody might have said, I have one rupee, I'm going to give one to you, Nikhil, and one to somebody else. So I might have submitted 2 transactions and tried to double spend, right? Okay, so now all the nodes are aware of all the different transactions, and some of the nodes are miners, Bitcoin miners, right? In this case, we're talking about Bitcoin, but there's other blockchains. And the miners, what they do is they package up a set of recent transactions, and they eliminate any duplicates, like somebody trying to double spend. And what they do is they do some work on the set of transactions. This is called mining. And I can explain how it works, but basically it's almost like searching for a rare number in mathematics that would make this block coherent. It would be, in this case, it's using a hashing function, and you're looking for a certain number of zeros at the beginning of the hashing function. But the simple way to think of it is to say any computer can package up the transactions and say, and search, you have to do a lot of computational power to find one of these rare numbers. Now, if you find one, which is hard to find, you can broadcast that solution to the rest of the network, and it's very cheap for every other node to say, oh, that's a real solution. I verified it. So it relies on this asymmetry of difficult to find, easy to verify. And if the first person to announce one of those, that becomes the next block in the chain. And each block has a pointer to the prior block, so that would be what creates the chain. And so you have this, that's what they call proof of work. It's basically the longest chain is the official record of the ledger, and it has a lot of computational power embedded in it because it took a lot of work to make this long chain. Sometimes there's a fork in the chain, and whichever one is the longest wins, and the other one dies off. And so it relies on, at least as long as 50% or more of the actors on the network are behaving in a good way, it works. And if you have a bad actor who tries to submit some invalid thing, they will get outpaced by the rest of the network. So that was the computer science breakthrough, really.
And when you do this proof of work and put a block on the chain, you get a reward, which is...
That's right, yeah. So if you discover one of those new blocks, that's how new Bitcoin are created. And so you would originally you would get 50 new Bitcoin by mining one of those blocks. Now it gets cut in half every 4 years or so. And so the amount of Bitcoin being released every 10 minutes is sort of decreasing like asymptotically.
That's because there is a finite number, 21 million.
Correct. Yeah.
I remember a time when people made a business out of just mining Bitcoins. Does that still work?
Yeah, there's lots of Bitcoin miners around the world. I mean, it's a business. We don't do that business, but you have to be very good at getting inexpensive energy to run the data center, and then using custom hardware like chips, custom chips that are optimized for mining Bitcoin.
If I were to start a business around, because I go back to like people watching this want to start a business. If I were to start a business in mining today, by virtue of increased energy cost recently, what kind of IRR might I make? Say hardware being equal.
Yeah. Well, it depends. A lot of the successful Bitcoin mines are adjacent to power plants where there's certain times of day where they may have just excess capacity that would not get monetized. So you could almost think of the Bitcoin mine is like it's like a floor on the price of electricity. So if it ever dips low enough, then all that can be the energy can be banked in the Bitcoin that gets mined, if you will. So it actually allows sometimes it's a real benefit to people who are trying to underwrite the creation of new power plants because they can say, all right, I know that there's a floor on the price of energy, and it helps them with their modeling. I should mention though, because sometimes people have concerns about how much energy Bitcoin uses, and I know you're focused on climate. You mentioned, right? And Ethereum and other blockchains use a new system called proof of stake, which is actually 99.9% more energy efficient. And I could describe that algorithm too if you want, but it's
before we move on to proof of stake and then proof of history.
Yeah.
If Bitcoin was initially built to transfer value from one person to another, it's not necessarily the most efficient at that if we call it digital gold today, right?
Yeah, that's a great point, actually. I would say that you're right. The Bitcoin white paper describes it as peer-to-peer cash. And money has multiple purposes. One purpose of money would be store of value. Another one would be a medium of exchange, which is more like peer-to-peer cash. You're right. I think it's fair to say at this point that Bitcoin has succeeded as a store of value, and I don't think it has become a medium of exchange. There's people who have tried to make that happen with the Lightning Network was a optimization layer on top of Bitcoin, but it never really took off. It turns out that when you have a deflationary asset like Bitcoin, that people think it'll go up in value over time. I mean, it's volatile. It's volatile, that's one issue for a medium of exchange, but the other one is people think it's going to be worth more in the future, so they don't really want to spend it right now. So we've actually seen massive growth of stablecoins running on blockchains, fiat-backed stablecoins, as the medium of exchange, and Bitcoin has remained the store of value as digital gold. So the way I think of it is we're almost like creating this new financial system, and it has to. It's not a perfect match to the prior one, but it rhymes, right? Like in the prior system we had gold, here we have Bitcoin. In the prior system we had, I don't know, Visa and Swift, and and here we have stablecoin payments happening on chain. So yeah, and then there's lending is being recreated, and insurance, and capital formation with stocks. It's like everything is being recreated on chain.
I used to watch these debates. I don't remember how many years ago, but Michael Saylor, MicroStrategy. I think he put a lot of money in Bitcoins, and he would argue gold versus Bitcoin, overall market cap, what will happen tomorrow.
Yeah.
Do you agree with him? For a public company to put, he somehow converted a public company into a fund which gives you exposure in a more tax efficient way into the upside of Bitcoins.
Right. Well, okay, so he did something really brilliant, which is, I think from a financial engineering point of view, it was brilliant, which is that a lot of different pools of capital in the world, they're able to buy public company stocks. but they were not able to buy Bitcoin. You might be aware that recently there have become Bitcoin ETFs as well, which have become very popular. I think they were like the fastest growing ETFs of the last few years. But Michael Saylor recognized that a lot of funds could just very easily buy a public company stock if they could not buy an ETF or Bitcoin directly. So he happened to make a public company that just was essentially 100% exposure to Bitcoin, and that created a lot of demand for that. And then he's using leverage in creative ways and things that I'm not entirely familiar with. But yeah, I mean, I think we just need to make it easier for people to get access to digital assets, and there'll be various opportunities like that along the way.
Do you want to move on to proof of work?
Or proof of stake?
Proof of stake?
Yeah, sure, if you want, yeah.
I'd love to understand the math behind it in a manner like an idiot.
Okay, I'll do my best to explain the proof of stake algorithm, and then I'm sure somebody on the internet will find a detail I got wrong. But
that's okay.
Yeah. So I think when they were creating proof of stake, they said, okay, proof of work, the Bitcoin system, it's very robust. It hasn't failed, right? And many people have tried to attack it in various ways. It never failed. So that's a great property, but it does use lots of energy. Okay, so how might we create a system that's equally robust but doesn't use so much energy? So in this case, the nodes start off the same way. They're relaying the different transactions to each other, gossiping and sending everybody's proposals. And again, some of them decide they want to try to propose the next block. Okay, so in this case, what they do is they package up the transactions that they believe are valid and no duplicates and everything, and then they have to, when they propose the block, they actually put up some money as well. This is the stake. And it's almost like a bond or something like that in corporate finance. So you put up this money and you say, I believe this is the next block and I'm willing to put some money behind it. And if other people agree and it becomes the next block, and by the way, the other people can vote on it kind of with their own money.
Can I ask a stupid question here? Say I stake 35 ETH or whatever to stake while I confirm the particular transaction. What if the value of the transaction is equivalent to 50,000 ETH?
The value of the transaction, but you're saying the stake is a lower amount?
Is this, yeah, exactly.
Well, so it relies on at least 50% of the participants of the network, hopefully much more, but at least 50% are good actors. They're not going to allow you to propose a block that is that double spends money or does something bad.
So do I have to stake relative to something each time I stake a certain amount of ETH to confirm a transaction?
I don't believe the stake is relative to the amount of money being moved. I think it's literally just, I think it's like how sure you are of that one, how much you want to put up. I have to go back and look at that as a detail actually, but basically what happens is, so you put your own money behind it. Other people can vote with their money and say, okay, I believe that'll be the next block. And I've checked it. I think it's legitimate, And basically the people who are right, they get their stake back plus interest. And the people who are wrong lose their stake. So you forfeit it, right? So it's almost like it's an investment that happens, a round of investment that happens every, multiple times a second, I believe. and people are voting with their money and they're saying, which one do I think is going to be the next one? And then if you're right, you get your money back with interest. And if you're wrong, you lose it. And so that allowed the network to reach consensus without having to use so much computational power.
Okay, please continue. Proof of stake, then why do people even, if proof of stake brought down the cost of transaction because energy was no longer required and people were staking by a magnitude of 99%, why did that not really become a currency and people start trading on it? Also, maybe you can tell us about smart contracts a little bit.
Yeah, well, the Ethereum network, which uses proof of stake, and there are others as well. I think a lot of people are trading it. I think it's been quite successful. If there's some other part of your question I'm missing on that, though, just let me know. Are you asking? Okay, so I think the proof of stake networks have been quite successful. And then you asked about smart contracts. So this is another thing that Ethereum really innovated on, was they said, okay, we don't want just to be able to move money from A to B. What if we could have programmable money? Okay, so what does that mean? It means that we could put some sort of, in the traditional world, you'd use a lawyer to write up a contract. And maybe it would say, okay, I'm Brian, I'm going to put 1 million rupees into Nikhil's company, and in exchange, Nikhil's going to give me some shares of his stock and some voting rights. And we could have a lawyer write up that on a piece of paper, and we could both sign it, and I give you the money, and I get the shares. In the Ethereum world, they said, what if we could put the law or the contract into software and on the blockchain itself? And so they actually have like a programming language in the blockchain itself. And so we can make a smart contract where you publish it on the blockchain. Anybody in the world can see it, and you say, hey, I'm raising money for my company. And if I, Brian, send money into that smart contract, I get the shares back. And so I don't have to trust that lawyer who wrote it or some court in some country. Like anybody in the whole world can now participate in that smart contract. And there's been very fascinating examples that have happened where people who have never even met each other, there's no lawyers involved, they've never met, and they'll post a smart contract, and like 20,000 people around the world within 5 minutes will participate in that contract, and they'll somehow collaborate and do something in the world together, go buy art or whatever they're doing. And so that's a very fascinating thing. Now, smart contracts are very new, and there's been lots of bugs in the software where people sometimes, there's not a lot of people who have experience writing these. So sometimes people will write one of these and there'll be a flaw found, and people get money stolen. So it's a very kind of new area, I would say. But
can you give me a simple example that I could use it for? Like if I need a smart contract?
Yeah. I'd say like the most classic examples that people have done so far is that like they want to raise a venture fund. And so they have LPs, and so they'll publish to the world and say, here's what we plan to invest in, and everybody can wire money, and then we can collectively decide to go buy things. That would be an example. Another example would be right now we're making an on-chain payment protocol, and in the world of payments, you need to think about how to handle things like refunds, and you can authorize the card but settle the funds later when the item ships, right? Or maybe you need to think about how to do subscription payments. So these are all things we can actually write into a smart contract. And so those are examples of the kind of things. It's actually what would be called a Turing complete language in the smart contract, meaning you can actually write any software. It's like a totally complete, just like C++ or JavaScript. You can write anything in there, but usually people are trying to make a very specific thing. They're not trying to like make a whole computer in there. Yeah.
So what are these being used for now? Say Bitcoin has become a store of value.
Yeah.
What is being built on top of proof of stake?
Yeah.
What's the real world use case today?
Yeah, well, another example would be borrowing and lending. So, in many places in the world, it's kind of difficult for people to get access to credit. And in these, people call these like DeFi protocols, like decentralized finance. These are all using smart contracts. So in this world, you can have a number of people who have money willing to lend and many money they want to borrow, and you can have an interest rate that gets generated, right? You had mentioned earlier, people on Coinbase can actually choose to lend their money out and earn these yields and things. That's using a DeFi protocol underneath. So some of these have reached maturity where, and it's by the way, it's global, right? So anybody in the world can participate in this.
How does it work? Like again, a stupid question, but when I lend money to somebody, I charge a rate of interest based on the likelihood of him paying me back.
Yeah.
So when I lend to somebody on proof of stake, a DeFi protocol, how do I know if I lend to Brian, I should charge 10% versus I lend to him, I should charge 15%?
Yeah, so there's different pools in these DeFi. You can choose, it's kind of like in the traditional financial world, you'd have like a credit rating, these agencies and things like that. So you can look at different pools and say, okay, this one, the underlying pool is only being lent on Bitcoin with a 50% loan to value, or different characteristics like that. Other pools might have more risk tolerance and pay a higher yield.
So they have to pledge something in order to borrow.
Yeah, there'd be collateral.
There's no unsecured lending per se.
Not that I'm aware of. There might be something I'm not aware of, but I think the ones that we're doing today are all collateralized.
And if we can move on to Solana and proof of history, can you explain that as well?
Yeah, well, Solana is another blockchain that was built for more like high throughput, speed, and low cost, and they've been very successful as well. So, I'd say that there was for a while there was actually like dozens of these chains that were coming out, and it's really kind of consolidated down where now I'd say for store of value it's Bitcoin, and for the utility layer, or like let's say the medium of exchange with all the programmability, it's basically Ethereum and Solana. And even on Ethereum, the most popular layer 2 solution is called Base, which is something we incubated. So a lot of the activities actually, it's really like Base and Solana, I think, are the two competing to be the utility layer chains. So we don't need too many. We don't need like dozens of blockchains. We need like a couple that work really well, and then there can be millions of different applications on top of those.
So stablecoins fit in where on this? They sit on which chain?
Well, there's stablecoins running on most chains at this point, but a lot of it's running on Base and Solana.
Yeah. And I'm sorry, I'm asking you like questions about the fundamentals of this and not Coinbase per se.
No,
but
it's fine.
I feel like for people who want to start, if I'm a young kid wanting to start a business in this, it helps to hear about the fundamentals of what they're building on top of.
Yeah, that's great. Yeah, I mean, we can talk about anything you want, anything in the world. Yeah.
What would you like to speak about? Open-ended.
Oh, well, okay. How do we create more entrepreneurs in the world? Let's talk about that, because I think part of it starts with education, right? India has amazing universities. There's probably lots more that could be done there. I think AI will help a lot with education, by the way. That's an important area. And then there's like the financial markets, right? How do you get your first seed check? Because, for me, that was a big deal. Like I had a job and I had an idea, and I was kind of nights and weekends working on my idea. But I wasn't going to quit my job unless somebody gave me a seed check, because I had to pay rent. I had to, I had to buy food and things. So in Silicon Valley, I went to Y Combinator, and they had a startup incubator there, and Paul Graham was the first person. He gave me a $150K check, and that gave me the confidence. Maybe someone believes in me. That's what caused me to quit my job and go try to really work on it. And then good mentorship and everything that came along with that. We've tried to do a little bit of this in India. Actually, the Base chain, we have this program called Base Grants, and we've given like $10,000 grants to a bunch of different developers in India, and a lot of them, we actually fly them out to Silicon Valley, and they do a session where they get mentorship and pitch and everything, and then they go back to India. And there's been, I think, maybe like 4,000 Base builders now in India, which has been really great. But yeah, like, what do you think we could? What's the the limiting factor? I know Elon likes to talk about the limiting factor. So what's the limiting factor on more entrepreneurs in India, do you think?
Risk capital is one, definitely.
Yeah.
There isn't very much available. I tried to copy Y Combinator and start our own version in India. It's called Foundry. We give about 20-25 kids $500,000 each every like 6 months, and they live in a house and try to build consumer companies together.
Okay.
But barring risk capital, culturally in India, unlike the West, people have not yet learned to appreciate failure.
Yeah.
I think that needs to change. I don't know how somebody changes mindset enough where somebody who tried something and failed is cooler than somebody who never tried. That distinction has to happen.
Right.
Yeah.
What happens culturally? Is it like it's looked down upon? It's a failure. It's a shame, or something like that?
Yeah. See, the thing is, a lot of this comes in societies with abundance, where it's okay to fail once because you can try again and again.
Yeah.
It's harder there. It's changing and things are moving in the right direction. I know the Prime Minister has launched this new fund for deep tech startups where a bunch of venture guys are getting money to then in turn put money into deep tech startups, and I think he's doing a great job with it. But the scale of India is massive. Like America has 300 something million people. India has 1,500 million people. To affect change even in culture, at that scale, is a significantly harder proposition. Yeah, but things like this.
I mean, the popularity of your podcast tells me something that people in India look up to entrepreneurs. I mean, a lot of the best CEOs in Silicon Valley, came from India, and I think even in India, there's actually a couple. Like we invested in CoinSwitch and CoinDCX, amazing entrepreneurs. I think my sense is they're kind of like they're like heroes, to many people there, rightfully so. There's another thing I like about, I noticed about Indian culture, which is that I feel like engineering is really celebrated as well. In the US, like in our government, it's often run by lawyers, and there's actually, I can't remember the name of the film. It was an Indian film I saw, but it was basically about three engineers and like they all...
Three Idiots.
Yeah, Three Idiots. Like that was
Amir
such a...
Khan movie.
Right. I mean, I don't think that film would have been made in America because people don't celebrate engineers like that. I don't know. Do you think is that true?
Yeah. See, for a long time, because of what you said earlier, the Indian origin people who came here and did very well, like when I was growing up, the ultimate upside for me at some point of time, not today, but like 25 years ago, would have been clearing some kind of an exam, maybe going to IIT and then coming to the US for college and then joining Intel or IBM back in the day.
Right.
Because getting paid in dollars back then felt like something which was unattainable back home in India. I think that's changed to a certain extent. A lot of people have done well. A lot of first-gen people who started with nothing, people like us and many others like that, got lucky in the boom cycle in India, which has, strangely lasted over 25 years now. We didn't really get hit in the subprime. We didn't get hit in the subprime meltdown. The regulators did a good job of keeping leverage at check. And the Indian markets have, I think, compounded at about 11%. I might be wrong, but over the last 25 years. So a lot of people have done well.
Yeah.
But we're working off a smaller base and the pace of doing well has to go up exponentially, for which maybe a lot has to change. Yeah. What is your connection to India outside of this? Is there anything there?
No, I mean, I've visited before and we're excited. We have an office in Bangalore.
Yeah. I'm from there, by the way.
Okay. Yeah. And I mean, I've spent some time in Delhi speaking with the government and Mumbai and everything. I just found them to be very engaged on crypto topics. And, actually, by most reports, India, believe it or not, is the number one crypto country in the world by a number of people who use it.
I read that, but I don't know how. I read it and I don't know if I believe it.
Well, there's more trading volume in the US.
Yeah.
But yeah, I think Chainalysis published that report. Maybe you're not seeing it day to day. I don't know, but
I don't see it. When I meet people, I mean, unfortunately, this is true of the recent past. A lot of the people I met who were into crypto, like really into crypto, were also really levered on crypto. And I think in the last correction, for the first time in a long time, they've become very disenfranchised in a way. Because I think it was sudden. Like, I remember all these guys telling me you need to create a 100 Bitcoin, whatever number of Bitcoin wallet when it was at about 110, 115,000, which is not a long time ago. But the last correction seems to have hit people hard.
Yeah. Well, crypto is down the last few quarters, for sure. One thing we've been doing is just diversifying the set of asset classes that are we're building the everything exchange so you can trade stocks and commodities and FX and everything, right? Index funds. So we see every asset class being tokenized and brought into on-chain. to 24/7 and global liquidity and all this kind of thing, which is much more efficient. But the other thing I would say is crypto is not just about trading. I mean, it started that way. In the first 10 years were mostly about trading. But now we're seeing stablecoins just grow like crazy, and it's totally uncorrelated with. So even if the trading markets are down, stablecoins are growing like 3 or 4x per year. So I think that that'll balance things out, and people need to pay for things all the time. In trading, something's always going to be up, something's always down.
Yeah. When I think of stablecoins, I'm still not able to wrap my head around, like, Satoshi's white paper started around protest against not being under government control in a way, not being subject to excessive printing by governments. Now, it seems to have turned around 180 degrees where, after the Genius Act, everything is backed by US treasuries and there is KYC at every point. Blockchain is not really transparent because everybody can see. If I'm a central bank and I'm adding allocation to say I'm a foreign central bank and I'm adding allocation to a particular thing on the blockchain, it's visible to others. There's no anonymity per se. It seems to have become the opposite of what it began as. Don't you think?
I've heard that argument before, and I don't really see it. It's true that it started off as like very fringe and kind of renegade and anarchists and everything, and it is becoming more mainstream. So like now that we have regulatory clarity in some major markets, like in Europe and America and in Singapore and places, we are seeing more institutional money flow in. We're seeing the Bitcoin ETFs. So these, in some ways, it's becoming, it's becoming more credible. But if you're a central bank moving money in Bitcoin, people might be able to see the ledger is open, but you can't always see who the person is, right?
But with KYC, you can't? Don't you know which?
Well, law enforcement, so if you're using a centralized exchange that does KYC, like Coinbase in India and in America and other countries, we work with law enforcement. So if law enforcement sends us a subpoena, we're required to turn over that information. But the average person won't be able to see it.
Like it is for a bank transfer.
Yeah.
The average person can't see it, but the protest was very much against law enforcement. And
well, I don't think Bitcoin was ever against law enforcement. I think they were against high inflation eroding people's wealth and
caused by the government.
Yeah. Well, overprinting in some cases, or intermediaries taking high fees and slowing down innovation, or banks being bailed out, these kinds of things. So it's true. The centralized exchanges, which are sort of the link between the fiat world, the traditional financial world, and the new financial world, they are largely regulated today, and they're doing KYC and all these things. Once people have crypto, I think they can start to participate in the new economy, and that's where they're using DeFi or doing payments on cross-border and saving money on remittance fees and things like that. It takes a while to update the whole financial system. There's still people in America who pay their rent with paper checks and these kinds of things. In many ways, like India's ahead with mobile payments and UPI. So our goal as a company is really to update the financial system, make it faster, cheaper, more global, more fair, just provide better financial services. But you're right, it's like there's a lot of pieces to get moving in that direction.
What is Zcash, Brian?
Yeah. Zcash, you asked about as well. I mean, so after Bitcoin, the Bitcoin white paper came out, there was lots of innovation that people made other variations of this in computer science. So Zcash made a privacy-focused blockchain. And they said that, financial transactions are some of our most sensitive information. Of course, we don't want to broadcast it to everyone. We should have optional privacy. So Zcash had a lot of brilliant cryptography behind it, and this guy Zuko is like a really smart cryptographer who pioneered a lot of these zero-knowledge proofs. So yeah, it's gotten a resurgence of interest lately. Actually, people are trading it again. There's also people working on private transactions on Base, including us, for instance. So hopefully we'll be able to launch the first private transactions on Base soon as well. So I think, for this truly to be adopted, we had to solve a couple of to make a new financial system, you needed a few things. Like you needed scalability of the blockchains to get the cost down and the speed speed down. You needed regulatory clarity, and then we needed privacy of the transactions. It's actually almost perfectly mirroring the evolution of the internet. Because when the internet first started, there was no HTTPS, so there was no secure private transactions. You didn't have broadband, so it wasn't scalable. So it's kind of going through like a similar evolution on the crypto side.
I was speaking with your colleague earlier, your communications colleague.
Yeah.
Very interesting person.
I'm sure she'll be thrilled to be in this interview. The columnist people always like to be behind the scenes, but
you can say something about her, and then maybe we can play it.
Okay.
She told me about her 3 kids.
Okay.
We'll put up her picture when this part is playing. She was showing me the Jamie Dimon interview this morning.
Okay.
What was that?
Well, so we are trying to advocate for our customers to have clear rules in America to have benefits from this new financial system, right? So that includes a whole variety of things, including what I shared earlier about we want people to be able to earn more money on their money. Some of the banks are thrilled with this. They're actually doing integrations with us. We're doing stablecoin integrations with 5 of the 20 largest banks in the world. Some of them are less happy about it. It's a little unclear to me why. There's the reason that sometimes the bank, it's actually not really the banks themselves. Usually it's the bank lobby, which a lot of industries have these lobbying groups in DC, which become more protectionist sometimes.
But I get it. Like if I were a banker and if you park money with me, I get 1%. But if I park money in a stable coin, you give 4%, is a problem.
It's competition, right?
Yeah, it's actually a problem, right?
Well, it's a problem in terms of they're going to have to improve their products and maybe offer more to their customers, but I don't see it as a problem systemically or something like that. So in my view, they're trying to craft arguments to instill fear in legislators and lawmakers and say, well, this is dangerous. And I don't think there's any truth to it. Like the president's own Council of Economic Advisors put out this report saying that the bank's concerns were illusory and fake, basically. And they've sort of made these claims like, well, if you want to do this, you have to have a bank license like us, and that's not what the law says. The law says you need a bank license if you're going to do fractional reserve lending, which we don't do. And the Genius Act, which passed in the U.S., already made this clear and legal that stablecoins can be backed by short-term U.S. Treasuries, 100% reserves, right? So
I have another question here.
Sure. Yeah.
Sorry, when a bank is doing fractional reserve, wherein I need to keep a part of the money that you have and then lend it and all of that.
Yeah.
And you get to keep 100%, you have to keep 100% of the money I park with you. Banks in their, we call this CASA in India. It's current account to saving account, and how much money is there versus how much money is lent. I don't know what that word is in America. But banks on pure banking alone do not make a lot of money. They make money out of a whole bunch of other things. But if Brian gave me money and I took the money and lent it to somebody at a carry of say 2, 3, 4%, depending on what I'm lending against, on that business, the NPAs, the percentage of loans which don't pay out and they go like defunct, cut my carry or my profitability to such a large extent that I struggle to make money as a bank. If a bank is going to struggle even with holding a fractional portion of the reserve, how will you do better holding 100% of the reserve, needing 100% of the reserve always to be parked?
Yeah. Okay. So you can go look at the big banks and kind of where is their revenue coming from, right? And some of it's coming from this fractional reserve, which they call, net interest margin, they call it. Some of it's coming from their payment businesses. Some of it's coming from asset management. There's lots of different types of banks. And so in this world, in my view, we should have a financial system that does not have fractional reserve as the foundation, because it's not a secure foundation to build on, right? There's been many examples of these bank runs, for instance, and typically what happens is either the company blows up, and even if there's FDIC insurance, the customer only gets a maximum of $250K or something. So there's either the customer loses money or the government has to come in and bail it out. And it creates this kind of adverse incentive for banks to take unnecessary risk. Occasionally they blow up. I don't really see why we need a financial system based on that. There can be an underlying layer of companies that actually just store, if you're paying, I'm keeping my money with someone, why not ask them to keep 100% of it, right? Now, if in a stablecoin world, these regulated stablecoins, like they can be held in short-term US treasuries, the government has said that that's quite low risk. It's the risk-free rate, some people call it. We can take a small percentage of that. We can provide products for people. If the customer is choosing to lend out their own money, they're opting into it, right? It's not something happening without their permission. We can take a fee on that. We can have a payment fee it's probably a 10x improvement over the traditional financial system, but it's still a fee, right? So we make money on trading stable coins, custody fees, like staking fees. We have a Coinbase card where you can spend stable coins and crypto. So we're doing great as a business, but our cost structure is just fundamentally different than the big banks and traditional financial services companies. And so like any disruption that comes along in the world, like, when you had newspapers and now the internet arrived or anything like that. And, the big banks, they're great companies. They're smart CEOs. They're going to adapt and they understand this is an opportunity. They've survived many waves of innovation, from the internet to electronic trading and, ATMs instead of having people at the branches working their bank tellers, right? So the best banks are leaning into this as an opportunity. We're working with many of them to power a lot of that tech. And some of them are still trying to preserve the old way, and they're lobbying for, firms and organizations are sort of doing a zero-sum kind of regulatory capture mindset. I have very little tolerance for that as a CEO. I believe that we all have a responsibility to build the future, accept that change is constant, and we should try to make better products for our customers and compete on a level playing field. If I see a company sort of trying to do protectionism, I'm going to call that out.
In the direction that you're going in, especially when you mentioned the DeFi thing, will you soon become like Robinhood, or will Robinhood soon become like you? It's starting to sound like the same. I mean, the business I have in India is a lot like Robinhood. We've been discount brokers for about 18 years now, and regulation is different. We can't fractionalize. We can't do a bunch of things that Robinhood is doing, tokenize. But the path you're heading in and they're heading in seems to be converging at something.
Yeah. Well, I'd say that lots of fintech apps and companies are adding more of these features, right? So they have customers who want to trade not just stocks, they want to trade crypto, they want to trade commodities, they want to trade FX, like perpetual futures. So we've actually done a great job of that now. If you can trade all of those things on one platform at Coinbase and have, increasingly you can have global pooled liquidity and capital efficiency for traders who that's important to. We also want to become the primary financial account for people over time. So they're doing direct deposit, and they have a Coinbase card, and they can get a loan. So it's partly a brokerage investment function. That's like, here's the pool of money I want to grow over time and build wealth for myself and my family. Here's the money that I want to use to like live my ordinary life and be safe and pay rent and earn good rewards on that, and maybe send money to my family abroad and whatever I need to do. So I think that we can use crypto to just, that's the main thing that I would say is different, is that we're the company in the world that stores more crypto than anybody else. We're crypto native, and we're leaning into crypto as the way to update these financial services and hopefully provide 24/7 global trading, faster, cheaper global payments, better rates on your loan, better rewards on your card. We want to use crypto to improve the financial system. I think we're the best company in the world at that, but you will see I think every financial services company will integrate crypto in some way, shape, or form. We hope, by the way, to power a lot of that for other companies using our Coinbase developer platform, which is kind of like our AWS. But if they build it on their own as well, that's great, because it's going to take thousands of companies to update the financial system.
And even the banks will join this, I guess.
They are already, actually. We've announced actually, integrations we've done with JP Morgan and Citi and a number of others that I'm not sure if I'm allowed to say. Yeah.
You've in a way gone from
BlackRock. We work with BlackRock as well to power their Bitcoin ETFs and different things.
The best argument somebody made for crypto, I have a friend who runs a private equity fund in San Francisco called Mickey Malka. He has a
I know Mickey, yeah. He's an early investor in Coinbase, actually.
Yeah. So whenever I see Mickey, I saw him like some time ago and we were having a meal and he spoke about Bitcoins and crypto not as things on the blockchain, but how they're inherently energy as the unit of transaction. He made a very nice argument for it. In the world that I live in, or we live in, it does seem to be going that way. That the future of transaction will not be what the central bank of our countries tell us is a unit equivalent to something, but some form of energy. And if this can be considered that, it kind of starts to make a little bit of sense.
Yeah, that's an interesting idea. I mean, I have heard people discuss this, that if AI and robots continue to accelerate at the pace that they are, and we live in this world of abundance where this bottle of water is essentially free, or mining and manufacturing, and okay, so then what is still scarce? I think real estate would probably be scarce. They're not making more of that, at least on this planet. Energy, I think you're right. It could be, you could imagine the demand for energy just becoming exponential.
Real estate is scarce if there are more humans.
Yeah, that's true. Well, even if there's more robots, though, maybe. I mean,
robots need real estate, I guess.
Yeah, I mean, we're not like running out of space to make data centers at the moment, but I guess you could imagine I still think real estate will have value. It would be hard for me to imagine real estate becoming free because it's not like you can just produce infinite amounts of it. But so you could end up in a world where, and then there's Bitcoin, which will be scarce. So I think, in some ways, like real estate is the original Bitcoin because it's like provably scarce. I think energy could be, compute could be another fundamental unit.
Real estate won't be scarce if Elon goes to Mars. You're expanding in a different dimension.
Yeah.
What do you like? I sit far away from what's happening in the world of AI, but I interview a lot of these people like Sam, Elon, Dario, and all of them. What do you make of it? Like me, the stock trader, investor, I'm starting to feel at this point that if I were to take every private company in AI and short their stock today, in 5 years I might make money.
Okay. Why do you feel that? You think it's a bubble or what?
It feels a bit like the internet bubble. I'm not saying AI will not have a use case, but again, this is a very immature understanding of somebody who's not an expert at the science. I'm not an engineer or in that domain. But I feel like all of these models will get to a point where they're very similar to each other. Either by copying or reverse engineering or whatever, there will come a point where these models become so similar to each other that more countries will go the China way, where I think the world was getting globalized. The next phase is the world gets fragmented. India will have its own copy of the model. Another country will have its own copy. The tokens, the energy, all of that will sit domestically within our country. It might not be at the cutting edge, but it'll do the job. If the world goes in that direction, I don't see the reason to pay the multiples that these private companies have today.
Yeah, I think I see what you mean. I think I probably somewhat agree in the sense that, right now, the demand for intelligence seems to be unlimited. So I think that's going to continue. But, the open source models are really 6 months behind, and they're 99% cheaper or more sometimes for inference. So I think it's entirely possible that a larger percentage of the workload goes to these models that are 99% cheaper. It's kind of like what Moore's law happened with chips, right? But even more dramatic. And the chip industry didn't like, it's a very important industry. It's had a good run recently because of this new wave, but it's not just going to grow infinitely forever, right? So there is going to be some world we get to where, there's like these very powerful frontier models that are useful for discovering new physics or something, but 99% of people are just running on, they become price sensitive at a certain point, and the models get good enough and cheap enough where you can run it on commodity hardware. I don't know what the terminal value of these AI companies, and then it's just like any technology revolution, like where's the value going to be captured? Is it in the frontier models, or is it really in the people building chips and energy? I mean, the coding harnesses to me don't feel like that defensible. Some of them have actually been leaked on the open source. I mean, you could actually I think software is basically free, so you could recreate a coding harness like the Anthropic coding harness, I think. So it's it makes me a little nervous when I see these valuations growing this fast as well. Like I've seen things like this happen before in crypto, and they correct, and then there's real value under it, so then they grow later. All markets seem to repeat these cycles with the internet and everything, even going back to railroads and canals and everything.
I agree with that. In a way, I'm rooting for it.
Yeah.
Like a correction. The one thing I do hope, especially in India, this is again personal to me, but since I am from there, I'm batting for that region. We had this phase where there was Microsoft available and there was Linux available. They were both almost equally the same thing.
Yeah.
But getting stuck with a Microsoft for a few years when they don't charge much takes you to the point where they begin to charge and it becomes harder to move away from it.
Mm-hmm.
I hope people building in India pick open sourced over these models which are charging a fee, because the last thing India needs is, a kid paying $20 a month to another American company, especially if you're building a business which is an application layer on any of these models.
Mm-hmm.
You don't want to be held hostage to these guys when tomorrow the thing that was 6 months behind has caught up, but you're stuck because they can get you stuck.
Yeah.
Yeah. I don't know how to articulate this better.
Yeah. I mean, I'm a fan of open source. I think I'd like to see the open source models continue to evolve and build and get better and better. So, and then I also appreciate companies who put in all the time. There's like 1,000 details to get right to make something good. It's like having Mac OS or something like that, versus an open source. I'm glad Mac OS exists, these kinds of things. So it's a good healthy balance.
Yeah.
What are there any companies in India focusing on open source models that are particularly good?
Building an application on top of open source?
Or making the models themselves?
There's Sarvam, which is India's answer to a large language model.
Mm-hmm.
I hope they do well.
Yeah.
Yeah. I hope they do well for all of our sakes. But I think that's the thing. If you're building an open source model, I don't know if it matters who built it.
Mm-hmm.
As long as you can get the most productivity out of it.
Yeah.
Right? I think that's brilliant. And that's one, when I think about these things, that's one way I think of it. The other path it might take is if these companies keep getting any bigger, they get nationalized and we go into some form of socialism where the productivity gains of this are redistributed in some UBI kind of way.
Yeah. I'm very skeptical of that too. Whenever somebody says, this is so scary, everybody should have to come in and get a license from the government. I'm like, well, the government does a lot of things very well, but the one thing they're not great at is like understanding the very frontier of technology. And that usually just slows things down and it makes it better for the incumbents and it kills a bunch of startups. So I agree with you on that.
The one disservice, I think, I don't know disservice to who, but the American government is making the entire crypto world very American right now. Either willingly or unwillingly. 5 years ago when I thought crypto, blockchain, I thought democratic, open, free, accessible. When I think of crypto today, it's increasingly becoming, the imagery in my mind is more Trump and President Trump and stuff like that. I don't know. I know it helps in the short run, and I know it's strange for you to be an engineer who has in some way become a lobbyist to a certain degree because you've maybe had to. It kind of works out in the short run, but long term, I don't know how it plays out.
Yeah, well, I certainly believe crypto is not about any particular political party. It has benefits for people on all sides of the aisle. When I speak to Democrats, they're excited about it in terms of financial inclusion, and people that they care about in certain communities are overrepresented in adoption of crypto. And then Republicans or more conservative people are interested in it from privacy and freedom points of view, or national security. So there's something there for everyone. I think crypto is inherently apolitical. It's true that Trump has really embraced it, right? Which has, given that the prior administration in the U.S. was so anti-crypto, that it was kind of a welcome relief. But going forward, my hope is that both whoever is in power in the United States would be just recognizing you can't uninvent this technology. It's going to clearly exist. We should just have a clear set of regulatory frameworks to make sure it's done in a trusted way. And then hopefully, the U.S. has an interest in having these companies built in the U.S. for economic reasons and soft power reasons, just like I think India should have the same goal. Certainly, China has their own motives here. Like, they certainly recognize the power of blockchain, and they've actually digitized the renminbi and made it like a central bank digital currency, which allows them to have more control over the population. So the people in China actually love crypto. The government is nervous about it. So I think in democracies around the world, like crypto will flourish.
Is there anything interesting you've learned about politics?
Oh, sure, lots of things. I mean, so I'm an engineer by background, so I never really had any interest in government. And my simple assumption as a young entrepreneur was that, as long as I just follow the law, I don't have to interface with the government at all. Like, I just don't have to spend any time on that because I just follow the law. Obviously, it's very simple. Well, it turns out if you're building in a new area, the law is oftentimes unclear. And if your company gets big enough, you will eventually intersect with government. Even if you have no interest in the government will eventually develop an interest in you. And
that's true everywhere in the world.
Totally, yeah. And so I was very naive on this, I would say. And at a certain point, my board started coaching me, and they're like, okay, we're at that point now. You might want to start to go to DC and these different, meet with the government in different countries where we're operating all over the world, and begin to develop a relationship and at the minimum, become an educational resource, right? And just put on a suit and be presentable and make sure you develop these relationships. Now, we started doing that. I couldn't really tell if it was accomplishing anything. And it wasn't until in the US, in the last administration, the SEC chair, Gary Gensler, who is this, kind of figure that polarizing figure.
You sued them and you won.
We did. We sued the SEC. We won. I'm glad you know that. Thank you. That was very...
No, it's a very inspiring thing. I hope more people can do that across the world in different ways.
Well, you have to... it's very contrarian as a public company CEO to sue your regulator. Most people told me, don't do that. That was a bad idea. And I think in general, that's true. You shouldn't do it unless it's existential and you're right, which we happen to be in this case. If we had capitulated, it would have probably spelled the end of the crypto industry in the United States. So we took a stand, sued them, and we did eventually win.
I think we have to take a break.
Sure.
And after the break, maybe we can get a little... I'm going to add two friends who know more about crypto than I.
Okay.
Okay, I introduced Aryan on a previous podcast, so I won't do it again. Aryan is my 21-year-old chaperone in the US.
Chaperone,
Yeah.
okay. Making sure you stay out of trouble.
Yeah.
Good.
Yeah.
And get into it.
Yeah, because I can't go to most places because he's not allowed in, right? And if you're always hanging together, It keeps me away from trouble.
Okay, I like it.
So Hardik is a friend of mine. He makes a lot of money. None of us know how he makes money.
Okay.
And people in India are always wondering because he has the things that come with money, you know? Like from the lens of viewing it from outside.
Okay.
I finally figured he trades crypto not too long ago. And he's tried to explain a couple of times the different trading strategies and stuff like that. So I thought it'll be interesting to have somebody who does really well trading crypto on this.
Great.
So he can ask you things that I did not, and so can Aryan. I think Aryan had a question on perps. Maybe you can start with that.
That's mostly because that's the most relevant part and most interesting part to me. I think Hyperliquid has been like it's been on the rise for the last 6 months. Everyone in SF talks about it. All my friends have. It's intriguing because equities that are used to be on 5-day markets are now 24/7. There's insane amounts of like volume that is floating around on these things. And so it seems like we're going towards that direction. I think we've like soft agreed that everything becomes more tradable. We'll tokenize everything. And I guess that's the direction Coinbase is going into. The thing that is the question that I had was this a few months ago, there was a lot of talk around this, degeneracy wave that will, accelerate if everything becomes tradable and speculation just keeps growing, because a lot of young people who would have chosen to build companies or they had a traditional path to wealth creation. And on one hand, these things are great because I love prediction markets. I love the perps. I think they do a lot of good, and markets in general are good. But on the other hand, the more this stuff proliferates, like it seems like these are like the traditional path is shut down. So speculation and these lottery ticket-like mechanisms seem to be the only way to create wealth. And so I'm just curious, like if you were a young person today, or like when you look at people like me who are, thinking about what they should do, is this net kind of positive for society? Do you think it's net wiring brains in slightly not great ways if speculation sort of grows more than it should? Or like where is the boundary? Like how, if you were to lead these things or make decisions, how would you make decisions?
Yeah, well, you're touching on a couple of great points there. So first, the rise of perpetual futures or perps is a big trend, and we've been working on that as well, especially trying to get it to be available in the US in a trusted, safe way that's truly 24/7 and with reasonable amounts of leverage. So we actually just today got approval for crypto perps and options tradable by US people. I think we're the first regulated exchange in the US to do that. So that's been a bunch of policy work, and Hyperliquid has been amazing as well. And I think on-chain perps is a whole other big trend that's going to happen, and we're going to see some of that happen on Base and the whole thing. It's great. We're going to work with Hyperliquid in a variety of ways, including with USDC. So that's all good. Now, I think your question is a really good one about just, financial markets obviously bring a lot of value. Are there downsides as well? And I would agree. I think there are certainly downsides. Like some of these things can become super high leverage. They can become, I think at times where crypto was under threat from the government, the only things that were allowed were sort of sketchy things. And you saw the rise of like meme coins and sort of different things like that. Now, leverage and speculation has been in the traditional financial system for a long time, right? So it's not, I don't think this is unique to crypto. You can trade stocks today that are regulated, by the SEC, but they went down 90%, right? There's lots of, Spotify and Figma went down like 85%, right? Yeah. So these are the blue chip companies. There's no such thing as investing without risk. So that's important for people to understand. And in the traditional financial system, there's been many examples where people got excessive leverage and things blew up, right? So I think that you have to approach this with caution and say, okay, what is the healthy mechanism, either from a regulatory point of view, or, I actually think there's one nice thing about the crypto markets, which is there's not like a bailout coming, right? Like, if something does take on too much risk and blow up, they suffer the losses. It's not the government that's going to come on the taxpayer's dime, like bail it out. I think that's a feature, not a bug. So, but it does mean you're going to tolerate periodic failures. So one thing we've tried to do at Coinbase is just try to help the crypto ecosystem mature and be more legitimate. And we do that by like cybersecurity audits on DeFi protocols. We do it by being a little more hesitant sometimes on what we list on Coinbase, and sometimes people are frustrated by that. We're slower to adopt it. I think you're going to find more reasonable levels of leverage and things like that, than you might find in some of the unregulated offshore exchanges. So we're hopefully doing our part to make it legitimate, and trading is great for that. We also need investing for just people to build wealth, and then there's lots of other things in crypto just around payments and borrowing and lending that'll just everyday people can use that is not related to speculation at all.
Hardik, would you like to go next?
My question would be,
First, tell us a bit about what you're doing in crypto.
I basically trade perps in a degenerate way. Like, I'm the one causing those liquidation cascades and stuff, like used to at that point. Coming to context of this conversation.
Can I ask you another question? When I trade equities, I trade them based on the fundamentals of the company, the earnings, the industry, the sector. When you trade the asset class that you do, what do you base it on?
Good question. So, unlike traditional companies which have like tangible hands going on to work and stuff where you can quantify someone's work based on like how many human hours of input has been given, like an employee and stuff, and then you base and come to like a bias which is usually a 51-49 in favor of either going up or down, deriving value, like where is this company going in the future. Unlike that, BTC is like one unique asset which at all times has a 50-50 bias, which means the half the world thinks that it's going to the moon and half the world thinks that it's going to zero. So it's a very different asset to trade, and it's a very psychological asset to trade.
A bit like gold.
Bit like gold, yes.
If you remove jewelry from it.
I mean, so the whole relationship between the gold, which is tangibly removed from the earth, versus Bitcoin, which is also like a system that is mimicking the digital proof of work system. It has very psychological impact. Like, say, for example, BTC is at whatever amount, like it can be at $1 million and people will still think that it can go to zero, and it can still go to 10 million or 100 million or $1 billion. So the way I trade this asset is it's very psychological on a day-to-day basis, and it depends on a lot of geopolitical factors on how people derive that psychology. That one day I think that it can go up, one day I think it can go down. So the liquidity of Bitcoin or any other crypto asset is very different compared to a stock. Like, there's a fair value for a stock to buy and sell, but Bitcoin can have 1 million fair values in a single day. So it's very different from how you trade stocks.
You have a question for Brian?
And I'm curious, are you using AI agents at all to synthesize
Absolutely.
the psychology of the market?
Absolutely not. I'm a very instinctual trader.
What are you ingesting every day to feel the vibes of the market?
My knowledge of American history, how it's performed, and previous empires falling and rising. Because BTC is a very psychologically driven asset. It depends on the emotional capability of a person to think if this is going up or this is going down. As of now. Because there's no real value of Bitcoin, right? I can't buy milk with it unless there's a paper money thing attached to it, which is the value part of it. So
Is the off-ramp easy now for Bitcoin? If I had one BTC, can I convert it into $75,000 of cash easily?
in 1 second on Coinbase.
Cash.
Yes.
Yeah.
USDC is basically 1:1 pegged to the USD, and I think Coinbase offers 1:1 off-ramping in the US with zero cost.
And there is an off-ramp from USDC to cash? I'm talking physical
Yes.
cash.
Instant. It comes in your bank account in seconds from Coinbase.
Right. You have a question for him?
Yeah, I do actually have a question for you. So, great job with Coinbase. I think that's the only exchange that I trust in this world. And why so is because, as I said in my previous conversation, it's a very psychologically traded commodity. And we have on today like massive machine learning programs that decode human emotion real time in relation to Bitcoin in predicting what level of the trading volume thinks at this point. There's this one company that has developed a complete AI algorithm that connects to, I know of the other international exchanges that exist. and as prerequisite order flow priority and stuff to gain access to that psychological information derived through numbers today. Are you willing to give that access to these kind of market participants in the US in the future?
What kind of access would it be? It's like the market volume, the trading volume data, or you're saying this?
The order flow data and order flow priority for AI algorithms, which consistently have priority over like retail investors or retail traders. And then they can predict on a microsecond level what the psychology of the buyer and the seller is at that point. Because I think Coinbase doesn't have it yet. And that's why I trust it so much, because that's the kind of edge that we have as a retail trader.
Yeah.
But
yeah, so obviously a lot of the market data is public in terms of volume and trades and things, but we definitely try to make it a level playing field for anybody to access it. In the traditional financial world, there are tiers to the payment for order flow and things like
correct.
Yeah, where you could get co-located at this data center and intercept, at the picosecond level and all this. We've built this in the cloud where anybody can spin up an AWS instance in the same availability zone and have the same access as Citadel or Jane Street.
Okay.
So that's one of the principles we try to have, is like a level playing field for any trader.
Okay, got it. Thank you.
No, I was going to follow up on, so in I don't think you guys like fully covered what you've done with Base, and the reason like I care about that is my exposure to crypto. I have some assets in here and there. I think I like playing around with everything, but it's easy to build. It's permissionless. That was kind of the premise why this started. If I want to build a new kind of product, where a yield product, any kind of transaction product, I can go pull in a bunch of contracts, tie them together, and get going. The way I see the most exciting part of this, just crypto sort of growing in the future, is more kinds of financial products being created by more parties and more participants, because the traditional financial system, you guys spoke about regulation and licenses, like it's still somewhat gated for the right reasons, but I think there's a lot of value to be created if you can sort of channelize the free market and sort of let people go build whatever they want to build. And so where is Base headed? Like, is this the direction, or maybe you have thoughts on how you think this should be steered in the future?
Yeah, well, for anybody who doesn't know, Base is a layer 2 blockchain that we built on top of Ethereum, and it's gotten a lot of traction. It's the most popular layer 2 on top of Ethereum now, and people are using it for all kinds of apps to be built, and payment stablecoins and trading and AI agents, like agentic commerce is happening on there. So you're right. One of the best things about it is it's permissionless to build on top of it. It's decentralized, so you don't need our permission to build on top of it. And one thing we're doing is we've been progressively decentralizing Base over time to provide that as a guarantee into the future, right? To make sure that we fully don't control it. So there's different stages of decentralization, that Vitalik has outlined in his writing, and we've made it through stage 0, stage 1. We're partway through the final stage of stage 2, and to do that, we've explored issuing a Base token. And there's a path to potentially decentralizing it over time on that route. So that's what we need to do next to ensure that permissionless innovation is enshrined forever, like in a way that nobody in the future could change it. And I think that we talked about earlier how we made some grants to different people, including in India, these Base grants of like $10,000, and people are building all different kinds of apps. There's about 150 startups, I think, that have come out in India building on top of Base, and some of the top ones we fly to the US to kind of meet with startup entrepreneurs, and then they fly back to India. So yeah, it's Base is one of the things I'm most proud of, because it's a public good, it's a public utility, and it's gotten a lot of adoption, and I hope we can just keep building that into the future.
And just as a follow-up on this is more a selfish question, but I think there's a world, like, as just AI adoption increases, like financial services will structurally change, because if the nature of jobs changes, if the nature of what people do day-to-day changes, like maybe credit changes, like lots of things have just structural changes in society will have downstream effects on financial services. And so if you were building something like, if you're 25, 22, if you were building a financial services company today, maybe on Base, maybe not on Base, like using crypto rails, maybe not, like what would you think about? Like what structurally changes in how financial services works today in the US?
Yeah. Okay. So I'll just share a few ideas off the top of my head, but I think sometimes I think about the history doesn't repeat, but it rhymes. So what needs to get built in this new financial system? And we talked earlier about some of the pieces like digital gold is there, and now we have stablecoins and payments. And okay, what are some of the pieces that are still missing? I mean, one of them that I see is actually like an on-chain credit score or reputation score, something that can use all the data on the blockchain with it's a graph structure, like in computer science, they say it's a graph structure, like Google has a PageRank algorithm. There could be an equivalent to that on-chain to decide how creditworthy someone is, or if I'm about to send money to buy something from a company, what's the reviews on that company? And so I think an on-chain reputation or credit score could be interesting. I think there could be someone who builds an on-chain ad network actually as well. This is basically monetizing attention or distribution on chain. And this is one of the best business models in Web 2, right? With Google and Meta and everything. People have lots of pluses and minuses to advertising, of course, but on chain, if I publish a smart contract or a DeFi protocol and I want to incentivize people to come use it, there could be something I put in my smart contract, which is like a rev share or something, and any wallet or brokerage out there that wants to connect into it and send could get a percentage of it. And you could sort of see all this on chain of okay, where am I getting the best rates by sending my customers? And anyway, so an on-chain ad network would be another one. I don't know. The last one I would just think about is I think that special economic zones are very interesting, and how are people going to do governance in these new worlds? This is kind of crypto and blockchain going beyond just money and value to how we might do on-chain voting or
coordination.
Yeah, coordination, like tokenizing parcels, like cubic meters of land in a new specially planned community or something. So title. Earlier you talked about doing insurance and things or mortgages. And this could be done in a world where all the land in a certain area is tokenized. And I think you could eventually have new forms of governance that emerge from that, and that's a more ambitious long-term startup idea.
Hardik?
It's a very different question, but I've followed your journey from the beginning. It's quite commendable, and you've always fought for what's right. So my question is Brian for president in the future?
Well, thank you for asking that. It's the first time I've been asked that. So I don't think I would be a very good politician. But let me first say I've always fought for what's right. I think that's
what would make you a great politician.
Hopefully, yeah.
The one that thinks that they cannot be a great politician always are the greatest politicians.
Well, that is a good insight. That is true of managers too, by the way. A lot of the best managers are people that they don't want to be managers.
Yep.
They're just really good engineers or something like that. I do think that that's a defining characteristic of Coinbase. When we published the Mission First blog post about not having political activism in the workplace, or when the SEC tried to kill the industry in the US and we sued them and won, or even this most recent bill in the US, the market structure legislation, where the bank lobby is trying to, take away people's rights and things. And we've fought back against that. So I appreciate you saying that. I've got to spend more time in DC, working on some of these things. And it's definitely, I would say it's not as fun of a job as being a CEO, because as a CEO, you have all kinds of problems, but ultimately you can listen to everyone's input on your team and your board and your investors, and you get to make a decision and you go. And if people don't like it, they can leave, obviously. But at least someone makes a decision and you get it. But by design, the government the founding fathers intentionally put this in there. It's kind of hard to get anything done, so nobody can have, unilateral power. So anyway, the Senate and the Congress, it's just it's like herding cats and 100 kings and queens to try to get them to align on something. It's pretty hard to get stuff done.
I think it's persistence, and you have it.
Yeah, well, we have been working on this legislation for 5 years.
Yeah, I've had my multiple US bank accounts shut because of on-ramp and off-ramp and stuff. And if it wasn't for you, we wouldn't be sitting here with such easy access to it and doing everything, amongst other million things that you've helped the country progress in the digital asset space. But I think you have the persistence to fight. I think all of those difficulties put into place shape a precedent.
Well,
Yeah.
maybe if we can get one of these new special economic zones set up on Mars, I would do that. You know, we'll have to see. But honestly, America is worth fighting for. Too.
Yeah.
Yeah. I mean, this is like a bastion of freedom and rule of law and all that. So I hope this is a longer conversation, but yeah, there's structural things that worry me about it. Deficit spending.
Yeah.
There's not like a cap in the, like I wish there was a constitutional amendment to sort of cap deficit spending and size of government. Otherwise I worry democracies are going to trend toward these deficits because like it helps to win elections, to get more free stuff. And then, we could go on down the list. But I think there'll be somewhere in the world, the frontier is where freedom will exist somewhere in the world.
Maybe
Look forward to that.
Maybe as a president, like if we have network states or sort of proto-states, then you have more places to be presidents in.
Can I ask you a selfish question from the India lens?
Yeah.
You know the tax policy?
Yeah.
You know the 30%, you know the TDS. What does a 25-year-old in India build around this world that has a use case?
Well, I think that's mostly a policy issue for the government. I will say, the 30% tax on trading in India is quite punitive. I think that's actually one of the most punitive regimes anywhere in the world that we operate. So I hope that the Indian government relooks at that again. Anyway, I don't know if an entrepreneur can solve that. With a new product. I think it's a tax policy issue. I think people can do it by essentially. Like we talked earlier about, there's so many Indians using crypto now that there's probably a policy effort like what happened in the US with Stand With Crypto. Maybe we can bring standwithcrypto.org to India and get people to raise their hand and say they want to elect pro-crypto candidates. And I think it's generational, so sometimes the people who are in office don't realize there's a real constituency for this. That would be my first idea.
And tell us a bit about health. I know you're passionate. How long is Brian going to live for? And what is one thing I can take, inject, eat that will help? Just one thing.
Well, okay, so broadly, I mean, I'm just interested in how to use technology to improve the world, right? And getting some liquidity from Coinbase has allowed me to think about how to invest in other companies. And I actually think, fortunes are being made in software and in crypto and everything. So it's on all of us to think about how to put that capital into hard tech problems, which are sometimes more risky. And I was very inspired by what Elon did with his companies after PayPal and things like that. So anyway, I did co-found this biotech company in the longevity space and invested in it called New Limit. And they're doing something called epigenetic reprogramming to try to find new drugs that restore function your cells had when they were younger. The company's doing really well. The first drug trials will happen next year. And they've been doing a lot of cool stuff with AI to discover these new drug candidates and whatnot. So that's been really fun. I invested in this company called Research Hub, which is trying to make scientific research more like open source software. So that company's been really exciting and gotten good traction. And recently I've invested in a couple of companies doing reproductive tech. So this is helping people. Everyone knows about like IVF and things, but there's these frontier. These biotech companies that would allow you to sort of create egg cells out of skin cells and reprogram them, or even have like artificial wombs. And there's all kinds of people doing interesting things, like even embryo editing. There's a company I invested in. So I think that will be an interesting area. I guess there's lots. I hope that everybody sort of picks an interesting trend on the horizon that they're particularly excited about and goes and tries to build a company in that space. I think that's the best way to improve the world, have a fulfilling life, build wealth.
But you didn't answer my question, Brian.
Which part?
What is the one thing I should take?
Oh, the part you should take.
Eat, ingest.
Well, okay, so I'm not a doctor, but the general ones are. I actually think sleep. If sleep was a drug on the market, it would be like the most effective drug on the market, and it's free. So it's nice. Everyone should probably get better sleep, track that.
So I love supermarkets. Whenever I travel, the first thing I do is go to a supermarket.
Yeah.
I went to Erewhon and they had these like jellies called Sleep. They have melatonin, theanine, and GABA.
Yeah.
So you meant to take one. I've been taking 4, 5, 6,
Okay.
and sleep is solved.
Okay.
Even with the jet lag and
Well,
day being
don't
night.
overdo it. I mean, yeah. But that
What can happen with theanine and GABA and a little melatonin?
I mean, those are over the counter, like non-prescription, probably on the safer side. But yeah, I mean, do you know how many milligrams of melatonin you're taking?
Each one has one. Each sachet has one.
Okay.
So if I take 5, it's 5 grams.
I used to take like a long time ago. I took like 3 to 5 milligrams of melatonin, but now I realized with just 1 or even half a milligram, it's really the same effect. I think I was taking too much, but
It's a sleep trigger, right? It doesn't help you stay asleep.
I don't know. Yeah, I think so. The big ones are like sleep, nutrition, and exercise, right? And you could add a fourth one, which would be like mental health, of just taking time to de-stress.
Now you've covered everything. I want one thing.
Sleep 7.5 hours a night or more. That's probably.
I would agree to that as well. Yeah.
Do you sleep, Hardik?
I rate perps. I fall asleep automatically every day.
Why is that?
It's a brain thing, right? The brain gets tired. It's psychologically so like demanding.
Actually, this is interesting. Brian gets to see a lot of traders from the other end. And Hardik is a very obsessive trader who's trading all the time. What can you tell him that you have seen as a pattern in traders to watch out for?
Well, I mean, I'm not going to say anything you don't know. It's like excessive leverage and things. You know, there are examples of people who've built it all up and it can unwind quickly. So how do you think about position sizing and leverage and taking wins some off the table?
I've learned it the hard way.
Yeah, I imagine
it's a process. Yeah.
The hard thing about trading is like, no matter, even if you do quite well, which it sounds like you have, with 20/20 hindsight, you can always look back and see how you could have done better.
Of course.
And so even if you do pretty well, you're like, oh, but it could have been a 20x from there. It does weigh psychologically on some people, but some people have the right constitution for it, and they
I don't think about what's behind me.
Yeah,
at all.
that's great.
Like,
that's an important thing.
Because if you in this game, if you start weighing everything down, you're not going to be able to treat it as something that you can do on a daily basis.
Yeah. So I think people who are naturally inclined can be great. They should lean in on trading. I think most people should probably not be traders. They should be investors.
Yeah.
You know, and dollar cost average, own the index fund, diversify the portfolio, have some in Bitcoin, some in everything, all the different pieces. So,
the one thing that worries me about Bitcoin traders is similar to what worries me about real estate developers in India.
okay.
The thing they have in common is they believe it will go up in perpetuity. And they believe it so vehemently that whenever you take a contrarian outlook, even if it's minuscule in nature, they will debate you to the end of perpetuity. Like a real estate developer in India will say, how can land go down? Land can only go up because it's finite in number. And strangely, it's similar to Bitcoin in that way.
Yep.
Things like that, when they fall a lot.
Yeah, gold, like the gold bugs and everything. Yeah, I mean, as long as the population keeps growing, there'll be less real estate to go around. I guess that's true. It doesn't mean it's the best investment that year, though.
But I think in Bitcoin, you can also make money when it goes down.
Yeah.
By shorting it.
The trader. Yeah.
The thing with Bitcoin versus gold, see, I have never traded a Bitcoin ever in my life, never bought one. So I feel comfortable taking the contrarian view because somebody here also has to.
Yeah.
The thing with gold is it's not replicatable today, at least to the layman, when I think of it. I know nuclear fusion has some byproduct which is a part gold, but it's a lot more expensive to make gold that way than it is to buy gold. I can't go and create 21 million more bricks of gold and call it not Bitcoin but Catcoin. But with Bitcoin, I worry is what if there is another Satoshi with a similar white paper and he creates another product like that tomorrow?
Well, if it's undifferentiated, Bitcoin will, I think, stand as the original, right? People give credit to the first thing that is a breakthrough, and Bitcoin was certainly a breakthrough. But if somebody puts out a new white paper of something that's differentiated and better, then yeah, it should get attention and investment should shift there.
And from our conversation, I've learned that it is not the most efficient of mechanism to store value, because if I have to send Aryan a Bitcoin, I need to spend a lot of energy and hurt the world and a bunch of other things just to be able to do that.
Yeah, I mean, layer one Bitcoin transactions are still a little bit expensive and slow. But the Lightning Network lets it move faster. We talked about how a lot of the activities move to stablecoins on Ethereum and Solana and Base. So yeah, I think the Bitcoin chain is okay with that. They're not intending it to be used for high volume payments. They're digital gold. Maybe it shouldn't be moved too often.
From you guys, anything else for Brian? We wanted to talk about one more thing, more opportunities for young people to start a business around this ecosystem. The intent of doing this every time is somebody goes back home and starts a business. Even you guys can come up with ideas. What can young people back home start as a business, very well understanding the regulation and compliance requirements around it in India?
I mean, I've kind of identified a little bit of a gap. I think, at least in terms of our country, I think the biggest advantage of this system lies in remittances. Like, majority of our foreign earning population have no clear ways of sending money cheap and fast, even today. So I think whoever today builds that remittance and RAM system is sitting on a gold mine.
We spoke about this too. They will not allow an off-ramp. Also, it doesn't make sense for the government to. I mean, say what you may about the Indian regulator, the one thing, it was one thing when the price was at 120. Now it's 75 after a recent correction. They seem to have preempted a bunch of turmoil and saved.
So I'm not necessarily talking about Bitcoin. I'm talking about like stable coin.
Yeah. But it doesn't have an off-ramp, right? Anything dollar denominated will not.
I said, I'm not saying it was easy, but I think that's the opportunity. Because if the opportunity, that's the hard part. But if someone figures out an entire on-chain payment system that can then lobby into like our banking system and provide easy access of like overseas transfers, fast and easy and cheap, and at par with the daily currency pairs and stuff, I think that's a huge opportunity in today's world, at least for our country.
I think all this agentic finance stuff is like, it's clearly going to happen. The form factors are unclear right now, but if there are more things that are tradable on chain, the best place to build agentic finance should be on chain, because you can just connect a system to a bunch of places. You can trade. You don't have perfect information. You have a lot of transparency. You have clear, even comparative data. And I think partly if like new versions of financial advisors, and if I have a goal and I sort of build a strategy around the goal, in the next 5 years I want to get to that goal. Like lots of products around, I think, advice and just agentic finance that is financial advisor like, I think will be interesting next 4 or 5 years.
Brian, any ideas?
I think agentic commerce is going to be big. I mean, I don't know. Like one of the most reliable ways to start a company is, I think there's two ways. One, you can identify some technology on the horizon or thing that you just think needs to exist in the world, and sort of do it mission focused. It's like, okay, we need to radically extend human health span. Why do people die after such few number of years? Or we need to become an interplanetary species and make, SpaceX. So you can start with like a big giant mission, and then work backwards from that of like, okay, if that's crazy and lofty and maybe, okay, what would I have to do to make that possible and that possible? And then there's like a small thing you would do today to try to make your first, bit of revenue in the first 3 to 5 years or something. So you can do a company that way that's like going after a big mission, which I like. The other way you can do it is just solve a problem that you have yourself, right? You can start to notice these problems all around you. And there's probably people living their life in India where they've encountered these issues, whether it's in crypto or not. And if you go build a solution to a problem you have yourself, at least you know there's a customer of one, and it's like you're not trying to build for some hypothetical other person. It tends to be a lot easier to build that way.
I force every guest I ever have to pick a stock that is not their own
Oh yeah.
to buy if they only had $1 to allocate to something. What would you buy?
Oh, well, I mean, so these you're not going to hear something like totally novel here. I think, like, you know, obviously SpaceX getting a lot of attention right now that it just has a natural moat. Like the best moat of all time would be like, how do you get from Earth to space? You know, and if they're doing 90% of that, that's powerful.
But you can't buy SpaceX because it's still not listed.
Right, but you can buy SpaceX perps. So pre-IPO perps. It's a new emerging category. Yeah, I mean, I think Google is just got a lot of. It's incredible, like the breadth of they've got chips, like leading AI models, massive user base. You know, like any company, probably lots they could be doing better, but they're just in such a good position.
It's funny how many people say Google.
Yeah. Yeah. So I you know, in any given day, there's probably something that's totally undervalued. But if you're talking about like longer term bets, these are some of the things.
Yeah. Anything from you like you'd like to speak about? Last 5 minutes or 2 minutes?
I hope more people go create companies in the world and try it. It's very fulfilling. I think if they don't work, you learn a lot, and it actually makes you even more valuable as an employee at the next company you join to go learn, and then you can go do your next one and try it again. And most of the entrepreneurs that I know, the first thing they tried didn't work. The second, the third, oftentimes the 10th thing they tried didn't work. So they have to just keep showing up, keep trying more things. And if you do that and you have an inclination to do it, you can end up creating a lot of value in the world for other people. You can create a lot of wealth for yourself, and you can think about how to help put it back into the next thing to help society advance. It's a good way to be on Team Human and, like, you know, advance everything in the world civilizationally.
Thank you, Brian. Thank you for doing this. This was fun. Thanks, you guys.
Nikhil.
No, of course.
Super. Thank you. Cheers.
Yeah, that was great.
Yeah? It's okay?
Yep.
I don't think like for people like us, like when I moved to the US like 7 years back and set up a bunch of like companies and stuff, like if it wasn't for Coinbase, like it wouldn't be so easy for me to do the amount and sheer scale of things and businesses that I do because of transfers.
Yeah. You were saying out there you're doing your venture investments through Coinbase.
Yeah, I mean,
that's awesome.
like investments coming from all over the world and stuff. Like it just wouldn't be possible. It would take me like months and months of like regulation to get through like stupid banks and shit. Like
the wire
stuff that you've done
transfers
is like
take a lot of time. Yeah.
Is made a huge impact on like the way I operate in this country.
Glad to hear it. Yeah, we need to get capital formation to be much more low friction so that anybody in the world with a good idea can just go raise $1 million like that.
Yeah.
They don't even have to meet the person or sign a bunch of like fees over to lawyers and everything. So we're starting to work on, once this legislation hopefully passes, we'll have a path to maybe go work more on capital formation.
Any inside information on what's going to happen?
On the market structure?
On the Clarity Act.
I mean, I'll just tell you what I've said publicly, which is we're working hard on it. I'm cautiously optimistic. I mean, I think you saw it got voted through the Senate Banking Committee.
Yeah, I did.
That was it with a bipartisan vote. The House has already voted on it. So now the two committees in the Senate have to come together to reconcile their drafts. And then it could go to full Senate vote in the next month or two. So we'll see.
Amazing.
Yeah.
Thank you for all you do.
Thanks, Brian.
All right.
This was fun.
Cheers.
Can I ask for a picture with you?
Yeah,
if you
of
don't mind?
course.